Hello and welcome to Mint's weekly corporate roundup. I'm joined by some of our reporters here in the Mumbai newsroom, and this week saw a lot of some good news, some bad news. But the most important thing, we saw Jet Airways, which posted a disastrous loss amount, and we have Sanjay to take us through the results. Sanjay, what's really going wrong in Jet Airways? Could you throw some light?
Jet Airways is that it's the second largest airline by passenger carried, and this is the biggest loss ever quarterly loss for Jet Airways. And this is the third consecutive quarterly loss for Jet Airways. So if you could carefully see, the revenue of Jet Airways has grown by 1.8%, but they failed. That means their total expenditure was 20%, over 20% more than what their revenue was, which would clearly say they had a rupee depreciation impact, they had a weak demand impact. Also, they couldn't price the product right because it's a lean season. So going ahead, this December quarter is going to be good, but I'm not sure that they could recoup all the losses, this humongous losses what they made. But they could get some, December quarter could see the conclusion of Etihad deal where they will get some 2,000 odd crores, and they could retire some of their high cost debt.
But there was some positive news also in the aviation sector regarding the Tata Singapore Airlines deal. So what's going on there?
FIPB has cleared Tata's and Singapore Airlines investment to start application to start a new full service airline. So this would mean that 100 million investment of by Tata's and Singapore will take off now soon.
Great. Speaking of investors, we also saw a clutch of PE firms this week ganging up against India's National Stock Exchange. So Malvika, why are these PE firms unhappy with what is going on in the NSE?
Sure, Madhura, we have seen that there are a few investors like SAIF Partners, General Atlantic, Temasek, and few others that form about 28% stake in NSE. They have alleged that NSE is not getting listed, which is delaying their exits. And they have also said that NSE is giving us very minimal, meager dividends, and the board representation is like not fair. So, but there are another set of investors like LIC and IDBI Bank, which are one of the biggest investors in NSE. They have countered these clutch of private equity firms, saying that NSE is not under any obligation to provide them the sort of returns that they are expecting. So we will see similar tussles happening. Like we have already been seeing some of the investors agitating against the companies that they have invested in.
So looks like the slowdown in India is really making some investors jittery. And speaking of slowdown, we have Zahra Khan who's here to talk about the cement sector. We saw some cement companies reporting numbers this week. What's happening in the sector? How is the outlook like?
Hi Madhura, thank you for having me. Two of India's largest cement makers, ACC and Ambuja, reported the Q2 earnings last week. And if you see, the profitability has declined on a year-on-year basis. ACC is down 51% and Ambuja is down 45%. And this is like a trend. If you see, on the 19th of October, Ultratech also reported a loss, a fall in profitability, which fell by 52%. And, a slowdown in the cement sector is a direct reflection of what's happening in the economy, how there's a slowdown in infrastructure and in the housing segment, and that's what's hurt the cement makers. It's not only attributed to the seasonality. Q2 is generally a weaker sector, a weaker quarter because of the monsoons, and construction activity is stalled. But here, there are two other factors that played in. One is that, the rising input costs. If you see for ACC example, input costs have gone up by 7%, while the cement prices have since January from 300 kg per 50 300 rupees for 50 kg bag has gone on to like 270. So the realizations are flat, and going into the second half of the fiscal, analysts are positive. They are going with a positive outlook. The companies are positive because I think the worst might be over for the cement sector, and we have to also keep in mind that we're getting into an election year. So there might be populist measures taken by the government, and so it all depends on 2014 and how the outlook comes about. Thank you.
Let's hope that the cement companies have a glimmer of hope in the coming quarters. To know more about what's going on in the Indian corporate sector, please log on to www.lifemint.com.